Hello, dear investors. Welcome back to the Dividend Uncle channel, your trusted source in the world of REIT investing, infused with our signature Singaporean resilience. Today, I wanted to share very quickly what I learned at the analysts and media presentation of Manulife US REIT's 1H 2023 results. Remember to subscribe and hit the notification bell so you won't miss out on any of our timely updates. Now, let's jump right into the piping hot bowl of laksa, which current investors of Manulife US REIT find ourselves to be in. Subscribers and regular viewers of the Dividend Uncle channel will know that this uncle has a sizable position in Manulife US REIT, and have been a worried wombat for the past year. Despite that, I've been doing some dollar cost averaging. This uncle also commented that every time I thought the trust has reached the bottom, the share price dropped again. Well, like the Marvel Avengers movies, I think we are now in the end game. I won't dwell too much on the actual presentation slides, which you can download from their website. But I would like to focus on 3 key points I picked up from the question and answer session with the analysts and media representatives. 1. Dividend payment halted due to breach of loan covenants. When the manager announced a 14% drop in valuations on July 18, 2023, it also announced that it has breached the financial covenants of its loans, regarding the aggregate leverage limit. The ratio of consolidated total unencumbered debt to consolidated total unencumbered assets cannot be more than 60%. This is called the unencumbered gearing ratio. But the REIT's ratio was 60.2%, hence a small breach. As a result, the REIT has to halt the distribution of dividends for 1H 2023. There are 3 important points arising from the meeting. Firstly, the REIT has made a good faith repayment to the lenders, reducing the unencumbered gearing ratio to 59.7%. While this is below the 60% threshold now, the breach earlier cannot be negated. The REIT would need the lenders to expressly waive the breach. Secondly, the REIT is still in negotiations with the lenders. While it does not have an estimated date when negotiations can be concluded, the manager stressed that this is the number 1 priority for them at the moment. This uncle has no doubt this is so, simply because of the next point. Thirdly, and most importantly, the impact of not paying dividends. What I understand from the meeting is that the impact of halting dividends is not as significant as we thought, but is nevertheless impactful. On one hand, this will not, and I stress, not, result in a collapse of the structure of the trust. This means that there will not be a resolution of the REIT, like a bankruptcy case. But on the other hand, if dividends are not resumed by year-end, the REIT will end up being taxed like a normal corporate, which will be paid from our dividends. This is because of the legal requirement to pay out at least 90% of its distributable income to Quality as a REIT. Although the meeting did not talk about the financial impact of this uncle thinks that the potential tax liabilities will be rather significant. My personal take of the potential outcome of the negotiations should not be bad. This is that it is in the benefit of the lenders to allow a resumption of dividend payment. The impact of not doing so would lead to a failure of the trust, and the lenders would have to go down the costly path of resolution. This is like making a cup of latte. You have a good cup of espresso, and decide to pour in milk that has soured. You will end up with nothing. 2. Sponsor support for Manulife US Trust. The manager reported previously that the sponsor was looking to purchase Phipps Tower to help the trust with its liquidity issue. In the latest presentation, it was updated that while the sponsor is still looking at this, the sponsor is also looking at various other options to support the trust. There are 2 key points to take away from the meeting. Firstly, the support may not come so soon. When asked about what the specific alternative support measures that the sponsor could provide, the manager was unable to provide any clarity. They explained that the ways of supporting the trust depends on the outcome of the negotiations with the lenders. Hence, any support will come together with, or after negotiations with the lenders have concluded. As mentioned earlier, this may be a while more. Secondly, there is a last-minute withdrawal of a representative from the sponsor at the meeting. Apparently, there were strong requests for a representative from the sponsor to be present, so that he can provide more clarity. And it was going to happen, but the rep was withdrawn. Some may view this as a lack of willingness of support from the sponsor, but I am more emphatic. Given that all the options under discussion was still confidential, there would be nothing more the rep could say at this presentation. So I am not too fussed about this. 3. Equity fundraising as a possibility? If you recall, in past presentations, the manager has always dismissed equity fundraising. The reason is obvious. The share price is at such a huge discount to net asset value that it will be extremely dilutive for unit holders. Currently, at 9 cents, and a net asset value of 40 cents, the shares are trading at 78% discount. At the meeting, the manager came out to say that they are considering equity fundraising as an option. This shows the dire state the REIT is in, but it also represents a way out. Existing unit holders will need to decide at that point on whether they are willing to support the rights issue to try to give the REIT a chance to recover. Or is supporting the REIT a case of throwing good money after bad money? Concluding remarks. To dividend investors like us, not receiving dividends is significant. That is why we should have a diversified source of dividend payments. For investors in Manulife US REIT, we are aware of the state it is currently in. The halt in dividends, if it results in a recovery in the REIT in the longer term, may be a short-term pain worth bearing. On that note, good luck to fellow investors in Manulife US REIT, and for potential investors looking for an opportunistic buy. Don't forget to like, subscribe, and stay tuned for more updates and insights on the Dividend Uncle channel.